Welcome to myfinanceteacher.org. In this video, we're going to talk about the gold price, and I would like to thank a lot of my subscribers on YouTube for requesting this video. I always do appreciate your comments, so keep them coming. First, I would like to look at the chart of the US dollar DXY index, as I think what is going to happen to gold over the next several weeks might depend on what happens to the dollar index. In about 2.5 years, between April 2016 and October 2018, the dollar index went through 5 intermediate cycles. They lasted for 15, 24, 31, 23, and 31 weeks respectively, and it gives us about half a year per cycle. There is also a case to be made that another intermediate cycle in the US dollar has finished in 16 weeks, lasting between September 2018 and early January this year. If that cycle has finished, then the US dollar has been in an advancing phase of another cycle for only under 2 months, which means despite some weakness this week, it might still try again to break above this resistance zone, which is at about 97.5. And if over the next several weeks, dollar does break above that resistance zone, go towards 98 on the dollar index, that might provide some reason for gold price to start moving down. Now, in relation to gold price, at the end of January, I was expecting some sort of a pullback to start relatively soon. Fast forward nearly 3 weeks, and gold price has actually increased from 1312 to 1340 at the moment. As we have discussed before, and as it has been pointed out in the comments, gold has been moving within this ascending triangle for about 3 years. And the relatively recent break above 1310 on the gold price and reaching 1340 at the moment makes the upper boundary of this ascending triangle somewhat magnetic, as it's not very far at the moment. I would say it's near the price of around 1370. So I admit that in the previous video I might have been a little bit too cautious with gold price, and it still might have a chance of reaching that upper boundary, maybe in the next 2 to 3 to 4 weeks. Given that potential, I think I have to review the cup and handle formation on the gold price. Previously, I have mentioned that I see the cup formation on the gold price with its edges at about 1330. However, a more correct way of looking at this cup formation might be a larger cup that spans all the way from 1370 in April last year to 1370 sometime in early March. Once we've done with this cup, we might see some sort of a handle formation, and that is why I still remain cautious in relation to gold. Although, as I said, it might have a chance to keep rising towards that upper resistance zone at about 1370. Of course, I might be missing some potential gains, but I don't want to take too much risk relatively late in the current intermediate cycle in gold. Now, talking about being cautious in gold, RSI, this is 14-week RSI, is reaching to overbought levels. It's as high as it has been in early and mid 2016. And at that time, with RSI so high, gold price was also pretty close to the top of the cycle. Another reason that makes me cautious on gold price is the duration of the cycle. The current one has already been going on for slightly more than half a year. And generally these cycles do last for about half a year. Sometimes they stretched for longer than that. But in any case, I'm not buying at the moment so late into this intermediate cycle. Yet another reason that makes me cautious on gold price is seasonality. This chart shows average monthly gains in percentages starting from January 2005, where that bull run in gold basically began. As we see, March is usually a negative month for gold price. It has been on average over the last 14 years. And if we look further into historical numbers, courtesy of seasonalcharts.com, this is a gold seasonality chart spanning the period from 1986 to 2016. And this chart as well shows that March is generally a negative month for gold price. So for these reasons, I'm not buying gold at the moment. But if you were determined to try to catch this possible rise from 1340 all the way up to 1370, you might want to keep your stops relatively close at about this local support level of 1325. So that is my view on gold. I'm looking for this candle wherever it comes. Thank you for your attention. Good luck in your trades. And this, of course, is not investment advice.